What's going on, Facebook?
We here, we in the building,
Gotcha.
How is everyone? Good to see everyone.
We'll bring this in a little bit so that, so you guys can hear us loud and clear.
Yeah, if you
All
can,
right.
please let us know.
All right, welcome to the CSC All Things Real Estate
Mortgage.
And insurance
Podcast.
Thank you for the pride.
All right.
I was somewhere else in my mind.
Season 9, Episode 6. Our email is info@cscallthings.com. Our direct phone number is 540-300-6277. And the quote of the, just kidding. Scuttlebutt.
Scuttlebutt. I mean, I'll start Scuttlebutt, I guess. It's a little long. I have a little topic to go into. I'm doing a cliff number today.
Oh.
Gotta let them feel pain a little bit. Okay, guys. Good friend of mine, Charles Wade, he's a realtor at Samson's Realty. He put this out yesterday, and I asked him, hey, man, okay, if I go ahead and say this, I'm still your thunder. He's very well read. He puts a lot of good stuff out. All right. Bottom line is the 21st Century Road to Housing Act became law. You heard that yet? Yeah. On July 11th, okay, of this month, this year, okay? And what does that really mean, okay? I'm going to read you a couple of quotes that I got offline about the Road to Housing Act, okay? Chairman Hill, one of the chairmen, it was a bipartisan bill that passed, okay? Now, how's it going to trickle down to the Main Street? I don't know yet. Nobody really knows yet. But here's a positive from the chairman. He says, homeownership should be within reach for more Americans. And this law moves us closer to that goal. This bill reduces unnecessary barriers to builders, okay, building for builders, strengthens community banks, and ensures families, not institutional investors, have a fair shot at buying a home. The final product reflects years of bipartisan, bicameral collaboration, and proves that when Congress stays focused on results, we can deliver meaningful reforms. Now, where it talked about non-institutional investors, as you might know, these big BlackRocks of the world, these big, huge investment funds are buying up residential properties and renting them out. Okay? You can't compete against a big bank like that, right? So this is supposedly curtail that. Yeah. And, we kind of hope, you see that, right? They're throwing up apartment buildings everywhere.
Yeah. They're converting it to high-density housing.
Yeah.
And in some cases, they're purchasing these properties. They're also changing the price point of the homes,
right?
And inadvertently, I say inadvertently, gentrifying, right? Yeah. Regardless of whether you talk about as race or economics.
Yeah, absolutely. And for me, I'm always less regulation for what I do, but it's supposed to reduce unnecessary regulation for the builder because they got to jump through a bunch of hoops. Yeah. But maybe that will trickle down to no dock stated again.
Yeah, it'll be interesting to see, and I haven't delved down into it yet, but it'll be interesting to see the balance, right? Because some people would certainly say that what happened in 2007 was the result of pre-Dodd, right? Pre-Dodd-Frank was the result of not having some of these barriers in place. So are we finding it like a happy medium, right? Yeah. It'll be interesting to see. It's too early to tell. Certainly we're definitely about people having access to home ownership and great representation, and everybody getting the same information. So it'll be interesting to see if it ultimately ends up being balanced. But I will tell you, even on a smaller scale, it's definitely can be challenging in markets where the properties that investors like, even people that aren't as big as BlackRock, are the ones that entry level people also like, right? Yeah. Low acquisition, low overhead. Yeah. So it's people think about apartments and condos, it's fee simple properties too. Yeah. So you're in a $300,000, $400,000 price range in Prince George's County, right? There's a distressed property, maybe you can. But an investor comes in and runs it up, right? And you just can't compete. You can't compete. Most people are going to get a contractor out the phone book. They're going to Lowe's and Home Depot, and you have these seasoned flippers, right? They've got their own crew. They've got their own materials. They've got economies of scale. They have all that. And what contractor quotes you $50,000, they're getting it done for 20 because their
They
people
have
are
it.
salaried.
Yeah,
they're
there
paying.
you go.
They're paying their crew.
There's a lot of that
They've got
going
a
on.
designated crew, right?
Yeah.
So it's not like they're paying the same as everybody else. So I'm interested to see
See how that goes. Let me ask you a question real quick for you guys. Have you found, I feel like a sense that homes are staying on the market a little longer now?
Yeah, I think overall, absolutely, positively, yes.
And what does that do to the market? Does that make it more competitive, better for buyers, or because rates are still kind of high, what does that do?
I think that it obviously it makes it better for buyers, and part of the reason that we're seeing some homes stay on the market longer is because buyers now have more choices.
Okay.
Right now, I will say that the homes that are priced appropriately and are in, because you can have a house that's a fixer upper, and you price it low because of the condition, right? But I'm talking about a home that's closer to turnkey and priced appropriately. We're still seeing, on the market Thursday, Friday, gone on Monday. We're still seeing that.
Okay.
But the homes that are lingering are the homes that are either not priced appropriately, or even if they are priced appropriately, there's a lot of work to be done.
Gotcha.
Because, lending guidelines and this, that, and the other, there's only so much of a credit that someone can give to somebody for a home that has distress.
Yeah.
Yes, we've got FHA 203K, right?
That's what has them.
203K, conventional has them, VA has them,
USDA.
streamlined and in full scope. But sometimes even those homes, the process, is just not amenable. So that's why the turnkey homes go faster. But I think it is a benefit for buyers more than anybody, right? For sellers, it's not so much as an opportunity, but you do have to take more time, and you have to have, as an agent, you may have been able to get away, I'm not raising my hand and saying me, I'm saying I'm an agent, just to be clear. You may have in the past been able to say, hey, I think we can get this, and you may not have to do that because you knew that the market was going to save you. The market may not save you now, right? And, comps are still very, very important, but if you're not turnkey, or you have deferred maintenance, you don't have updates, the house doesn't show well, it's cluttered and you can't declutter. If you have all that, and I would say it's an intangible on what value the market's going to put on your house. You can't. You say 600, but people come in, I got to move on it, I got to paint, how much does it cost to paint a 5,000 square foot home? 15 to 20.
Right.
If you're going to do it right. What does the buyer see?
Yeah.
The buyer sees 25 to 30, right?
Yeah.
Time, effort, energy. They want to close, move in, unpack, have a great day.
Right.
They don't want to close, stay in their old place, have the contractors come in, spend more money. So, So, yes, better for the buyers, for the sellers. It's not necessarily better, but you do have to make more. It's still a good market. Don't wait to sell. All you buyers and sellers, we'll wait till next year to see what happens. Don't do it.
They should, because, even in my area in Woodbridge, around, for those that know that area, around the Minnieville, Prince William area, they are building up. And they are turning it into a small Springfield Tyson's type of look, right?
Yeah.
With new condos and new restaurants that's coming and
Yeah.
overpass. So,
Yeah.
by the way, the traffic is crazy over there. Just FYI, if you're by
Yeah.
that way.
Maybe
But the market has to, in my eyes, and I'm not a realtor or a lender, but just knowing the market from what you guys.
And you're a consumer. You see
Yeah,
it.
and I'm a consumer. The market has to still be growing if they are still building.
There's absolutely, and you think about it, that piece of land has been there, historically speaking.
Correct.
One of the reasons Washington D.C. is so expensive is because there's definitely no new land, right? As you go out Arlington, Alexandria, as you move farther south, Prince George's County probably has more land than any of those, as does Charles County, right? That piece of land, and we're talking about the Quartz District, that piece of land has sat there for years, right? For years. So, but somebody finally put a plan together to get through, proffers to get it through, and everything else, and that's why it's being developed, and that's why it's there.
But I think to be you build it, they will come also.
Yes,
that's what happens.
The way they deal with that, though, is they knock down little homes and build their 3 homes where the little home was.
We're seeing that in Caroline County, where there's, right on Route 1, where there's a bunch of old homes, they're knocking that stuff down, putting up new ones.
And,
You know?
and that's the kind of stuff that we were talking about earlier, you know. But yeah, so there absolutely is the demand. But you know, I would tell you another quick point, and then we gotta get back on track. If you see a sign go up for new construction and it's similar to the product that you have, and you want to sell, you better get out of there before that new because generally speaking. Very few buyers are going to buy a resale when they can get a new construction close to the same price. And I would even say, depending on the price point, that delta anywhere between 20 to 50K, they're going to go new construction, right? It's a little bit about everything's new. You get to pick your own stuff, but imagine being a first-time home buyer, second-time, third-time. So now you got closing costs, right? You've got down payment. You have your buyer broker contribution, right?
Yep.
Now, in addition, but now you don't have any maintenance for 1 year.
Right.
You don't have any.
Yeah.
That's just the standard stuff.
Yeah.
Paying anything, bumper to bumper, just like a car. Then you typically some do 2 to 3 years on your major mechanicals.
Right.
Structural for 10 years.
Yeah.
So
Better insurance.
yeah. So why? So
Yep.
so a lot of
You can live
times
with it cheaper.
people,
Yeah.
and you'd be amazed. One of the first homes I lived in was a Saratoga by Pulte's, top floor, double stack condo. I was in one of our B&I members hosted something, and I'm looking at it, and she was in the top floor. I think hers might have been Ryan was a Picasso. If I put you one, you would never think it was the same floor. Completely different. Now they're years and years apart, but things are constantly changing.
Yeah.
My home's only 10 years old, but sometimes I feel like when I'm gonna look at these new home places, I go home, I feel like it's a log cabin, right? Because there's so many different other things, whether it's the LED lights or it's the floor, things are constantly changing. So, so definitely, and I have some clients coming up right now that are competing against new construction.
Right.
And there was one similar property, it was on the market, they had 3 price drops, 10K a piece, they finally took it off because they were within 20 to 30 of the new construction. And the new construction offered a main floor office, right? Main floor office, which this one didn't have.
Right.
So not only was it the same price point because they changed the floor plan.
Yeah.
So, so again, there's all kinds, this is being a segment, what are we, 12 minutes in? This is actually a good segment though, leading back up to, do you wait, right? Do you wait, right? Do you wait to find out how this all pans out? Do you wait for rates? You hear about insurance costs. Do you wait till somebody says, I don't want to do that, wait for insurance costs? Do you wait for pricing and interest rates? The only thing you know is what the market is right now.
That's right. That's right.
In your living situation.
Yep.
Those are the 2 tangibles,
Yep.
right?
Yep.
You bought your little 2-bedroom condo, it was just you. Now you have a life partner. Now you got 2 big dogs, or you got 2 kids in there. That's tangible, right?
Right.
You can't worry about the things you can't predict, right?
All right, let me say hello real quick, then we go. What's up, MJ? I got it right. MJ. Hello, Mrs. Dora, my girl Nika, all right? And my brother, John McNeil, is my Chowan brother. Thanks for coming in, my man. Come get some good stuff. We got to talk. My man, Bobby Infield.
Yeah.
Big Bob in the house.
Did you see Tag? What's up,
I see
Tag?
Tag. Tag on there? What up, Tag? Good. We got some folks coming in. Thanks for looking, guys. Thanks for watching. All right.
Listen, Muscular Butt, I always keep my eyes and watching and listening to a lot of insurance news. And then I listen to clients, their most popular topics, okay? And there was one interesting topic that a client she's not going to be able to sue the insurance company, so that's not going to happen. But her biggest gripe is that why does she have 1% deductible on her wind and hail coverage?
1%.
1%. Now, there's an option of 1% or 2%.
1% of what?
The deductible. All right. So, for instance, 1% of wind and hail can equal up to $5,000. All right, deductible.
So like if the
So
cost of
you know
repair
if your roof is damaged, tore off because of wind and hail weather, all right, you're gonna have, if you have 1% coverage, you're gonna have a $5,000 deductible.
And that 5,000 represents 1% of what?
Say if it's
$18,000, right? The 1% equals 5,000. It's not even going off.
So it's not dollar for dollar.
No, it's not dollar for dollar. It is not dollar for dollar. There's two coverages now. 1% coverage for one inhale equals 5,000. 2% coverage equals 10,000.
$10,000 deductible.
Deductible.
Jeez.
Now, let me explain. You tear up a whole roof, that costs $25,000. All right, to get done. So you put up the first 5, the insurance will pay $20,000 of that. If they have the 2%, it's $10,000. The insurance company, if it's 25, they'll pay $15,000 of that. Where that changed is you used to be able to have $1,000 deductible. Some companies $500 deductibles. Some
For the whole thing.
for the whole
Okay.
thing on a wind and hail roof. Due to all the risk, insurance risk rates are government controlled, and it comes nationwide, then state, then county, then zip code. Okay, so imagine all the home risks we have, all the catastrophes we had on homes, from California to Florida to up north to floods in Texas. Right, all of that now comes into a big pot, and that's how the rates get divvied out. That's the way that insurance is, okay? Here's the thing, some insurance companies, you can still get your $2,000 deductibles, $1,500 deductibles, $1,000 deductibles. But that is going to change just because of the amount of risk. Now, here's the beautiful side to it, that when customers see their premium is $2,000 less a year or $1,000 less a year, is because it's at a 1% or 2%.
Okay, give us some good news,
All
okay.
right?
Yeah.
Now, but if you change it to $1,000 deductible, $2,000 deductible, your premium is going to be high. The most important thing, please, if you don't have a broker that is actually going over your coverages and breaking it down, I suggest that you get one, myself preferably, 703-609-8213, because a lot of clients, when you're going to closing on a home or just switching insurances because you're mad at the price, you're just signing your name on the dotted line.
Yeah.
And when you go to complain to an insurance company, it's like, why is this deductible so high? I didn't sign up for it. They're going to say, oh, yes, you did sign up for it. Here's your signature.
Look
And
at
then,
it.
then you want to blame everybody, which I get. But listen, just like when you're signing your mortgage papers, just like when you're signing your car loan papers,
Yeah.
before you sign that insurance application, please understand what you're getting yourself into. Understand the liability protection, understand your deductibles. Another important thing, if you're in a flood zone, make sure you have a flood policy.
Gotcha.
If you're not in a flood zone, make sure, you still want to make sure you have good water backup sewage coverage, okay? And property damage coverage. You gotta make sure that those coverages line up, A, with your finances, B, lines up with the protection of your home. Because when something happens, and this is human nature, Mother Nature can destroy your house.
Absolutely.
And if it's not protected properly, you will have to come out of your pockets. It's not just about a cheap premium. It's not just about getting your insurance done and getting it out the way because you got other things to do. Insurance, if I could be biased as an insurance agent and say insurance is the most important factor of everything from your home to your business to your cars. That your protection is the most important thing, right? Because if you invest in your hard-earned money but don't protect it, you're just throwing money in the garbage. You're just throwing it in the garbage. So on your wind and hail coverage, if you want to call your carrier, say, if I have wind and hail damage, okay, because some commercial carriers, it does come off their deductible. So hear me clear. I don't want you to say, well, Cliff said it automatically is 1% or 2%. No. There are some companies that's the only option. There are some companies that you can have a lower deductible. But understand what that deductible does and what it does to the premium. Having a 1% and 2% coverage on your wind and hail coverage will make your premium, when I say so much cheaper, it literally can save you $1,000 a year. And that's huge when it comes to escrowing, because that adjusts your mortgage payment,
Absolutely.
okay?
Bottom
But
line.
if something happens, if you're not a person that saves and put money away for a rainy day, and then you gotta look for a company that has those lower deductibles, but your premiums are gonna pay high.
Something goes wrong.
Everybody has options in life,
Yeah.
right? And in insurance, you have options. Do you wanna, do you want that peace of mind and sacrifice a few extra dollars? Or do you wanna have a cheaper premium, but put some money away? So something does happen, okay, the money that you put away, now you can pay for that.
Different mindsets. You're a
Absolutely.
disciplined
And
person.
that's what it comes down
Yeah.
to in insurance.
Yeah.
It's all about the mindset, it's all about, understanding what you have.
Yeah.
Insurance just don't mean protect.
Yeah.
There's dollars to
Way
it.
to
There's
protect.
certain, there's risk factors to it, okay? And what your premium is, your next door neighbor, it would never, ever be the same, ever. Nobody will have the same payments when it comes to insurance, because it's judged off of you.
Yeah. A quick question for the 1% and 2% scenario, right? That where there's sometimes the gap between the cost and what your deductible is, right? There's no supplement or endorsement or third party that you can get to, let's just say, the job is $30K, your deductible is 1%, so it's only, you have to pay 10. There's nobody that'll help you out. There's nothing that'll help you out
I'm
with
so
that 10.
glad that you said that. So there is a company that I am looking into. I want to make sure that it covers the DMV and the areas where I insure, that they are just a wind and hail company. That all they do is cover storm damages, Mother Nature
That's
damages.
nice.
Yeah, so
Little
therefore,
niche.
correct. So you'll have a premium, you pay a monthly premium, and then you don't even have to, there is no deductible. You're paying for that to get
For when that happens.
For when that happens. Yes.
Yeah.
Well, understand, it's another addition policy.
No,
Yes,
Exactly.
yes, yeah. And you've talked before about there's sometimes it's better to go with a company that specifically handles a specific type of insurance, right?
Correct.
Beachfront property, short-term rentals, things of that nature. So that kind of falls under that same thing. And
It's,
see,
let me give one thing here. My sister Gina Andrews Bruce is watching us. She says, "What's the logo on your shirt?"
What?
It's the
Wait a
CSC,
minute.
girl.
Well, who is that? You don't know about this?
who's the slimmest?
Probably me. Let's see here.
CSC.
CSC. Sean Cliff.
In case you didn't know.
All right, yeah.
Yeah,
With the
yeah.
mic, because we're doing podcasts. This is in 2026, our fourth year. We're not
Yeah,
stopping.
yeah.
Yeah, so thank you.
Yeah, it's CSC. That's why sometimes you hear Cliff say, "We all we got." For those of you old school people, remember the movie when they used to say C and B is all we got, right?
All we got. Yep.
You know the movie put it in the
Yeah, yeah.
We're not going to tell you.
Good stuff. She's oh, I see it now. Yeah, good stuff. All right, and who's up? Anybody
I
else?
don't know, man. What time? Because I still haven't done my scuttlebutt.
Oh,
You got scuttlebutt?
I did
You
mine.
might-
He made
I'll do my topic
You
last
been doing
time.
scuttlebutt day? You haven't done your topic either.
Yeah, but it's okay, go. Let's go.
Let's go.
Quick job.
I don't
Yeah,
need, we
yeah.
got 7 minutes left. I'll make this quick. Those of you who think that you can buy new construction and not have representation, it's not a good idea. You shouldn't do it. You should always have
Good
representation
topic, yeah.
in anything, right?
Yeah.
And I know that sometimes it can create a financial burden to have representation, right? Sometimes there's agents who don't want to handle new construction because of the compensation that they give agents, right? This is my caveat in that all commissions are negotiable. There's no such thing. There's nothing set in stone in Virginia, the DMV, or the United States. It's all negotiable. But the reality is, in some cases, some builders pay less than what is seen in the market, right? And that can create a gap between what a buyer is able to pay and what typically they will. But I will say this, working with a situation right now with a builder, just absolutely, we're gonna get to the finish line, okay? But absolutely dropped the ball in a myriad of instances. I don't know where it's gonna go, so I can't say too much, but I will say, if this client had been on their own, right, and didn't have me, and I'm not saying, I'm obviously, I'm great, especially great with helping people navigate and stuff like this. But I will tell you, even an agent not of my caliber would have been able to help this woman, not to my degree, but at least to have somebody in their corner, right? So there's a lot that goes on in buying a home, and a lot of times it's great. And some new construction people will say you get a better deal if you don't have an agent. They're not telling you how everything comes from a different kitty, right? Construction is different than sales, is different than closing, is different than mortgage, right? So don't listen to that. And I will tell you, there's no amount of money that can replace you getting a home that wasn't built correctly, right? Not getting the proper deal. Why do we sometimes say, and Sean knows this. I'll say, Sean, hey, I've got somebody. We're probably going to end up being new construction, but will you take a look at it and get a pre-qual first? He does it for two reasons. One, they may not do new construction, but two, he knows it's a first line of defense against people who are getting quoted the wrong rates, the wrong deal, and possible some sort of discrimination or implicit bias, right? So, and people often think about race, right? But there's also ageism, right? So, right, and a lot of times people think older clients aren't astute. So, and I'm not saying the overall number of builder reps that I've dealt with have all been above board. But if you go to a new construction site, the first time you go, you don't have to fill anything out. You don't have to register, okay? In some places, or more than others, if the agent is not there with you that first time, they won't let you get representation, right? So
I think you should dive into, though, why is it important? When they say, because they make it sound so great, the agent, they work for them.
Yes.
Not for you, where you work for them.
Yeah.
You work for the buyer.
Yeah. And let's keep it human nature, right? It's human nature. It's not plausible that somebody is really going to go up against the wall versus the person that pays them.
Right.
It's human nature. To be a little gun shy. Short of people who are actually activists, right? Most people tend to be gun shy. So when it comes down to it, if it's something in the bill quality, or it's something about in the documents, or how you're being treated, how are they communicating with you? Are they sending you emails about certain things and going, it's really easy, like you're stupid, right? There's no defense against that. So I just think in all things, it's still purchasing a home. It's still one of your largest investments ever, and you need somebody who fully represents you. I don't do dual agency. Dad doesn't do dual agency. Why not? Oh, Chris, you give us, because it's not worth it. I think that everybody should have their own representations, and our reputation is worth more because it's easy for a miscommunication to happen.
Absolutely.
What is money on one transaction worth somebody getting the impression, right, wrong, or otherwise, that I'm helping one side more than another? And why would we risk our livelihood for one transaction? It doesn't make any sense. So at the same time, think about it, when you go to a new construction site, you're essentially an unrepresented buyer.
Right.
You're an unrepresented buyer.
Unrepresented buyer.
And they like those.
Yeah.
They like you coming
we
in.
have specific, in Virginia, if we have a listing and someone wants to buy our listing and they don't have an agent, we have a specific form that states that they're buying it as an unrepresented buyer.
Wow.
It's clear as day. If we want to do dual agency, and even if you were, I'm representing the seller and then you want to buy it, there's a new form that has to be signed talking about dual agency, right? That says I'm representing both. And basically that form says, hey, your agent may not be able to advise you. So ask yourself, you'll never see a document, a builder document that says it that bold.
Right.
And again, I'm not knocking the builder industry. Like I said, I'm closing new construction tomorrow. So I'm not trying to knock them. But all I'm saying is, for the consumer to just think about those differences, you should always have representation in anything that you do.
Good stuff.
That is good, man. That is good.
Okay. I'll close out, I guess.
Yeah, you go ahead, man. I can always talk about, rent. I can do that.
Oh, you weren't done?
No.
We've been kicking this down the can for 2 weeks because we're cooking. We're cooking. Go ahead.
Okay, well, all I was going to say, I'll make my brief.
No,
When you're buying a home, okay, please consider your employment situation.
Bluntly, don't quit your job if you're trying to buy a house, okay? Because that's going to affect you, okay?
and have got a great example to where we have buyers who are in between jobs, but they wrote a contract. Okay? So, you think it doesn't make sense, right? But that's what they did. So, hopefully, we're in a situation, go ahead.
You brought up a good point though, but if you're a contractor,
No matter what you are, okay? If you run a contract for a home that's closing,
I'm sorry.
whatever is
I'm thinking if
closing.
you're a contract employee. Say if you're on a contract of 3
No, I'm talking about home contract to buy the home.
I'm sorry.
You're under contract. Now, Chris took you out, and you didn't tell Chris or your loan officer, you know what, guys, I'm switching jobs, okay? In between time. Or, hey, I'm now going to part-time. Another problem.
That's a big one.
Okay, this is, okay. Now your income, when Chris and I talked in the beginning, was $100,000, now it's $35,000. Okay? So even if you're in the same line of work, I found out that Fannie Mae and Freddie Mac don't even count that. You can't even use, that you went from full to part,
Oh, yes.
they don't even count that for a year. I called my guy, what does this mean? They want 12 months of you, their position is, we don't know how you're going to work your hours.
That's right.
As part-time. You working 20, 36, what is it? Right? So they want the history
Yeah.
for 12 months to see, then you come back. But that happens, you lost your house, you know what I mean? So the bottom line is, if you're going to buy a house, you have to stay the course where you're at right now. To get through that before you make any big financial changes. Okay, because you hurt yourself, you shoot yourself in the foot.
Yeah, and I think, we've talked before, sometimes life happens and it's something you have to do, right?
Yeah.
But you consult with your loan officer
Yes.
first, right? Changing jobs isn't necessarily, the ship isn't going to sink, but it does take more time, right?
Yeah.
And there's different requirements for
Yeah.
different lenders and different programs.
True.
Timing's everything.
I've always said this, your loan officer, he's your champion,
Yeah.
right? He's the one that's gonna talk to the processor and talk to the underwriter. He's in your corner. And the worst thing in the world is to have Sean get a phone call, found out, hey, did you know they took a payday loan? Hey, did you know they took this, that, and the other? Because then he can't speak to it.
Yeah, I mean-
Versus, hey, Sean, something's come up. I know I'm not supposed to use this credit card. I'm gonna have to use it. How's it gonna affect it?
Then we'll
right?
adjust.
And
We'll
then we'll
pivot.
adjust, right?
Yeah.
But you don't want the underwriter and the processor to find out
Midstream.
in midstream, because then it looks like, as soon as we close, this person's gonna go crazy with it.
Yeah.
Right?
Yeah. Because at the time we talk, I've got your stuff. You're showing how many houses, but you're not communicating the life changes.
Yeah.
That's going
Yeah.
on.
Let me piggyback 10 seconds, max. What they were just saying on the insurance side, very important. On auto, when you switch insurance companies because you're looking for a better rate, some companies, you don't get that prior insurance discount unless you've been with that company for at least 12 months. Some companies, it's 6 months. So when you switch to a different carrier, always ask, do I qualify for the prior insurance discount? Your broker, your agent, someone should say to you, how long have you been with your current one for? If you say 6 months and that carrier accepts the 6-month deadline, you're good for the discount. If it's 12 months, you do not qualify for the discount. Same with your home. If you're with your home for 5 months, you find a better deal, you're not gonna get that prior insurance discount with some companies because they want you to be there for a whole year.
Because they need the money.
They wanna see the risk factor out
Yeah.
there like that, all right? So keep that in mind because that just brought it
Good
all
stuff.
back to
All good
what
stuff.
you said.
All right, so I got it. So keep it.
Getting that rapper. We took over an hour today. All right, so just to recap, our email is, I'm gonna do a clip. Give everybody the digits.
Holla at your boy Clifton Durham, the insurance hustler. Yes, that's me. I am him. 703-609-8213.
Sean Andrews, all things mortgage, loans, funding, whatever you need. Money. 540-809-6162.
Christopher Logan, the collective Remax Allegiance. I turn dreams into a reality,
Okay.
obstacles into opportunities.
Okay.
240-476-5600. 3050.
That's coming to a t-shirt.
So our email is info@cscallthings.com. Phone number is 540-300-6277. Facebook is @Facebook/CSC. At Instagram, I believe, is @allthings_CSC.
Yes, sir.
Quote of the day by Spencer Johnson. In 1 minute, you can change your attitude. In that minute, you can change your entire day.
Who?
It's hot outside.
Yeah,
Drink plenty of water. If it doesn't concern you, mind your business. Have a good week, everybody.
Peace.
Good rest of the week.
Yeah.
And we'll holler at
Music,
you.
with the music. Yeah. I got the one shoulder.